Welcome to Taking Stock. It is Tuesday. It's the 19th of September, 2023. Oh, it's a big week. Tomorrow, John, we've got CPI inflation data. And the day after that, we've got the Bank of England hiking up the rates. Many people say it's the last one, maybe. Ooh, who knows? But there's lots of company news out today, isn't there?
No, it's overwhelming. It's a torrent of company news.
I know, exactly. But listen, I want to ask first and foremost, if you haven't watched this before, then please get involved, hit that subscribe button, like, share, do anything you want. But I want to ask you, what's your favorite stock and why? Already, we've got a couple of Avacta fans there. Avacta is a very, very well-followed company, and people say for a good reason. There's good news out today about their sort of trials there, and we'll go into that. But, if you have any others, well, in fact, include Avacta if you want. But, if you have any other stocks that you hold, you've held for a while, you really like it. I find them a bit like kids, John, stocks. It's almost like saying your most recent kid, even though you shouldn't be a fan of it, you are. The one you buy, the last stock you buy is your most favorite, and you pretend you like all your kids pretty much. And then, some kids after a while you put for adoption and you sell. But I find that sometimes. Do you find that when you buy a new stock, you're enthusiastic about it, and then as time goes on, you think, oh, maybe it isn't as good as my older kids I've got. So it's that kind of way. What's your thoughts? Honestly?
Not really. I don't really have favourites, I have to say.
This favourite?
No, not when it comes to companies. They're there to do a job. It's
very
not
mercenary.
Like
they do a job. It's true.
Well, they are there to do a job. The whole thing is mercenary. The whole thing is about money. The whole thing is about making money. And as long as they're doing that, then they're in my good books. Which is why they're very different to kids. So no, I don't really have a favourite. There's companies that I like, but there's companies that I like that I don't hold. There's companies that I just admire from afar that are too expensive to buy. I don't know. I think falling in love with shares is very, very dangerous.
It is dangerous. And there's a fine line between, you can get literally super confirmation bias where anything a company releases, well, that's actually good news, even if it's bad news. But I've seen that happen. And whenever I've had that in the past, I've really liked the company and I've ignored the figures or whatever, the facts. I always say figures are facts pretty much. Then you can get into a bit of a knot. But AI Investor says Unilever, 400 well-known brands in 190 countries, 3.4 billion people using a Unilever product every day. That's a huge customer base. They have a growing dividend that has longevity over many, many years. It's a stalwart Unilever, isn't it?
Yeah, on the basis of what I said, this is about money and returns. And making me money, Unilever should be my favourite because it's actually the one that's delivered over the past couple of years. So for me, I hold it. It's a funny thing, but as I say, ultimately the bottom line is all that matters.
Yeah, well, that's the weekly chart from 1996. It was 653. It's now 40 quid a share. So that's been a nice earner. It's been paying dividends for that long. And
that was one of the attractions of Unilever. They used to call them bond proxies. So they were sort of very, very. When you sort of got the whole QE era, and bond yields dipped to next to nothing, you could get. Income. You could replace that income with a share like Unilever or Diageo. A lot of companies like that were very, very steady, could be relied upon to deliver cash flows and therefore pay their dividends. So they did get bid up quite a lot, but for quite a good reason. There's also a big emerging market story behind companies like the ones I've just mentioned. And if you think about where the world is going, the growth is coming from emerging markets, those populations which have a long way to play catch up on the sort of GDP per capita front, massively rapid urbanization, really massively innovative economies. So I like companies that give me those sort of exposures. Unilever is definitely one of them.
Yeah. Okay. Well, let's look at the indices. They pretty much all up apart from AIM. It was down that yesterday. It's a stuck 0.14% down. I'm sure that was exactly the same as yesterday. But FTSE up. There's some trading update from Ocado, Hargreaves Lansdown, final results. And of course, that's at an all-time, well, it's close to all-time lows. But
it's amazing.
Yeah, I suggest when you get final results out in the company, it rises. That's a good, it's a good sign, because it doesn't dump. Because in this market, people are quite risk averse. So if there's anything within the results people don't like, they can tend to dump it. But the fact they haven't is quite good, I suppose. Kingfisher's down 7. Obviously, their results out today, not very good there. What are the 250s? Ceres Power is up. TUI. Marshall's down. Okay, all right. So
Hargreaves is amazing, and it's really quite extraordinary how far out of favour this has fallen. This is a massive company. The numbers today was a kind of testament to what we've talked about before. That when you've got a company that is a dominant market leader, it's the go-to platform really for most retail investors. Not
what's
particularly
the PE on that?
Oh, let's have a quick look. I haven't even looked.
So the profit before tax increased 50% to 402 million. Go on.
Yes, so I have forecast PE because that's what matters.
It seems quite positive here, doesn't it? On the results here.
11 and 11.
Is that it? So that's good because they do pay a decent dividend, don't they? So yeah. I mean, like I said,
forecast dividend yield 5 and a bit. I mean, here you go. Here's another example of what might be described as a bond proxy. This is a huge platform with a huge customer base, paying their monthly SIP fees or ISA fees or wherever it might be, trading regularly. I mean, it's adding new business, perhaps not at the lick that it was before, but it is. I mean, look at those headline numbers. I mean, they're extraordinary. You've got, I think you just had them up. Revenues up 26%, PBT up 50%.
Yeah, that's good considering new business inflows is down. So that means it's more efficient, I suppose.
It's down, but that's still new business inflows. It's not. It's just not as fast as it was before. So, we've had a tough market, and you keep hearing that retail investors are leaving the market, but this says otherwise. I mean, it's incredible. I do think is it sitting on net cash as well? I have a feeling it is. Yeah, it's got 500 million in the bank.
Okay. Is that all?
Why does that share price look like that?
Yeah. The thing is, it hasn't. So if you just use the sort of, let's get rid of the 50-day moving average. I mean, in fact, I do like to get that on. The blue one is the 50-day. And the red is 200-day, and that's almost seems a bull bear line. And you see, it's had problems. It has had squeezes up there and brought back down, but like it's now crossing 50-day, which is a nice sign. It needs to get above that. It can't. It seems to be there must be some kind of selling going on there because I don't know about the holdings, but it rallies and it dumps for some reason.
Yeah,
but I think it's just the story of the. I genuinely think we are coming towards, like they said, the end. I think we'll become. Regardless of recession, we know we're in recession probably. It doesn't matter. That's why the market sold off the last 2 years. The market knows that. It's no big surprises here now. The only worry sort of is the oil price. I mean, it's in the oil price recently.
It's shooting.
Bit of a spanner in the works on the currencies. I want commodities there. Look at Brent crude oil. Look at that. Literally shooting up there. That was a bit of a resistance level at $90 a barrel. It's now at 94. But interestingly, they're saying peak demand in oil is going down. I was reading the EAA today, and I don't think it's bring this up, but it said, look at this. Despite cumulative increase, annual demand growth is expected to shrivel from 2.4 million barrels a day this year, just 0.4 in 2028, putting peak demand in sight. The trouble is with this, you see, that doesn't mean the price will go down because if there's less going to be used, less will be explored for and less will be supplied. Precisely. So it's a supply-demand story. They may even out, so you never know where the price is going, I suppose.
But that's exactly why the price is shooting up, though. It's a supply story, Saudi and Russia are cutting production.
So
when you cut supply and demand is still rising, well, I mean, it follows course. The price is going to rise.
Someone did say, can you look at Ocado? It's been an excellent.
Do I have to?
A hell of a downtrend. And
I hate this company. Absolutely. No, I don't love companies, but I hate some companies.
Yeah. Why do you hate this company?
I hate this company. Why?
Yeah.
Well, I mean, where do I start?
Well, I don't know. Just give us one sentence. Why do you hate it? Is it because they're loss making? They promise a lot.
Losses. Yeah, we've not a profit in sight, in view.
No, I mean, it's been one of the biggest hope high potential stocks around. Let's be honest. When it started rallying on the automation and all that stuff, what's the market cap in this company? It's literally 6.6 billion. and it's like they are losing. How much did they lose? They keep group EBITDA. Oh, EBITDA though, 17 million.
Well, EBITDA is irrelevant for a company like Ocado. Because most of what it does requires masses of physical infrastructure, which depreciates and then has to be replaced. So why they're reporting EBITDA as a metric anyone should take care of, interest in, or especially that what they used to do, is this?
Well, we know why they're doing that. Well, we know why they're doing it because it flattens them more than the actual operating loss.
It's a ridiculous company.
Loss before tax for the half year was 212 million. I read alerts to this chart. The chart even now, like I said, it's breaking above that 200-day and breaking up new highs, but it's come back to 50-day here. But I can't see it. How much cash they got? I don't know.
Absolutely ridiculous company. And they used to try and spin it that there was some kind of like tech giant. All being a tech giant. If I was building these massive warehouses for clients at great expense and sticking some robots in. It's a very Heath Robinson approach to grocery, it seems to me. And you think, okay, so if they can use automation to help deliver profits, then great, but they can't, as their own account show.
Exactly. Yeah.
I've never been impressed. Hey, I actually dislike this company intensely.
Okay, I'm going to move straight down to most read because people want to see, it's annoying. Most followed company. What you've had there's been a seller in Good Energy for a while. I own some stock in Good Energy. Now we'll look at the results in a bit. But anyway, let's look at Avacta. This is the most read. And on final results days, it can be used as a liquidity event for people to get out. So even though it rose by 12% Good Energy this morning, it's come down on a few sells. And I think it was stupid, really. Look at the valuation. But Avacta, anyway, this is the most read. A couple of people say it's the most favorite stock. Of course, they've done their this ALS 6000 6-dose escalation. It's gone very well. Safety is very good. They even said significant reduction in tumor volume confirmed. This is a phase 1A. I thought they were going for phase 1B, but now they're saying they're going to phase 2 now, apparently. It's phase 2. And
that's good. That's good.
It is good.
You want to get through the phases as quickly as possible. So, this bringing that forward is fairly momentous.
Yeah, if anyone doesn't know about phases, I mean, it's a quick thing here on it. Basically, first phase 1, it's 15 to 50 patients, pretty much, or not many patients, and it's safety they focus on. But they also
safety is obviously massively important in a case of what Avacta's doing here, because this is about essentially being able to increase dosages to deliver very efficient. It's basically chemotherapy. Advanced chemotherapy. So and dosing is obviously dangerous in chemotherapy, and that's exactly what Avacta is trying to be able to increase without the sort of dangerous side effects. So safety is really important, and we seem to prove that. Yeah, exactly. So first and foremost, it's got to be safe. If the drug isn't safe, then you can't take it any further. It's looking like it's very safe. And then you look at effectiveness, pretty much, efficacy, safe and efficacious. Then phase 3, they compare it to what's out there in the market at the moment. Does it beat the standard? Is it otherwise it's not worth? And then obviously they may even go to phase 4, but and then FDA. But it's looking good. It's early stage, but looking good. And how much cash has Avacta got? Because I mean, obviously, clinical trials are not cheap. That's and the thing is, the further you go along these trials, the more expensive they become, because you're talking like, a handful of patients on phase 1, phase 2 talking about up to 100, and phase 3 could be several hundred, maybe even 1,000 odd, and that costs a lot of money and is randomized and all that. It gets increasingly expensive. But as yet, like I said, it's looking very good, and so well done for Avacta fans who are in that. Chart wise, they got a lot of cash.
That's good. Well, they need a lot.
42 million quid at the end. Cash and short-term deposit balances, 42 million quid at the end of 22.
That's good. It's still failing in that 200-day level, 200-day moving average level. It's rising up with that and coming back, which is quite annoying. It'll pop eventually, because you see the 50-day moving average now turning up, which is quite nice. That's a quite nice sign there. But do you know what? I know there's lots of fans of companies. Some people try to knock the stock, and I saw someone saying there's the placing needed, all that stuff. I wouldn't worry, when you have a company like Avacta that's so well followed, there won't be, I'm not saying they need to raise money, but if they do in the future, then they shouldn't have a problem, because it's well supported, well backed, and the shareholder register stacked. So I wouldn't worry about the naysayers. If you've done your research and you believe it, just stick with it.
Indeed, as Paul Hill pointed out today in the write-up of Avacta. The further through the phases they get, the more chance, big biopharma is going to come knocking on their door.
Oh yeah. That's what biopharma wants. They want you. They don't want to take on the risk of clinical trials. It's expensive. I mean, like I said, for example, one of the stocks I hold, Destiny Pharma, they've taken them up to phase 3, and then they partner on phase 3 because phase 3 is quite expensive. Yeah, and so you partner up and you share the potential royalties and the rewards from that.
Exactly. There's another company which was a big move today. I don't know.
Scancell, is it?
Scancell, indeed.
Yeah, someone mentioned Scancell, and
I've been sort of eyeing this company for a little while. It's been on the sort of back burner radar.
Cancer vaccine,
it shares up more than a fifth today. It's a cancer vaccine. This specifically is a trial against melanoma.
Yeah.
Which again, when this is phase 2, in fact, and the results are very, very encouraging indeed. Melanoma is a serious killer. Often because it goes unnoticed and then metastasizes into something more nasty. This is really quite an achievement here. Initial data from 11 patients had 82% objective response rate. It was far better than was expected, and this is it's really quite an interesting result. So definitely worth keeping an eye on this one. If you're into Avacta, I'd have a quick peek at Scancell as well.
Yeah. So someone says IG is better than Hargreaves.
As what?
Yeah,
that's a platform.
I know it's different. It's different kind of business, really.
Yeah, they're all these things that do different things. But as
Greco
a business,
says, I keep finding new favourites. That's what Gregory says. Glencore P6 Jedi says, as you pay no stamp duty and plenty of daily movement. You pay no stamp duty on okay. Why
on CFDs, spread betting?
Yeah.
No, you don't. But that's different. It's a trading platform. It's not an investment platform.
Yeah.
They do have a stockbroking division.
I think you've touched a nerve of Fredo. Fredo's having a go at you, John. For some reason, about Ocado. I think he's a Fredo, calm down, fella. We want to create a nice environment for discussion, okay? Not just slinging abuse at each other. If you want that, get on the bulletin boards. That's all they do is slap each other off.
I stand by everything I've said about Ocado. I've been watching that company for years.
Yeah. Anyway, can I? So we got Eagle Eye, Water Intelligence. There's lots of stuff out there. Fintel, Victor's busy today, isn't he?
Victor's had a look at Fintel. It's a company I like. Again, it's sort of quietly doing its thing in the retail investment services space, retail financial services, basically helping IFAs get to grips with the enormous burden of regulation they face, the enormous amounts of data they have to manage. Big new regulation coming there, which is all based on sort of outcomes, what do they call it? I can't remember what they call it. But it's basically, the outcomes of investment. So all sorts of regulation. Fintel helps companies, IFAs, manage that. I find it really interesting. It's sort of transforming, or it is a fintech, arguably, but it launches a thing called Fintel Labs, which I think is really interesting, which is essentially an incubator for innovative fintech businesses. And these results, slow and steady, but keeps delivering.
Well, I was Water Intelligence. Is that moving today?
It's down a little bit.
That's down a bit. Look at that. I may put an alert on that. I think I quite like the when I say a chart and down like that from 13 quid to 373. Wow, there we are.
It's surprising. It's very decent top line growth, decent profitability being delivered, cash in the bank. Clear demand for its solutions. It's buying back it was a franchise model for sort of leak detection stuff, but it's something we often talk about, Justin, which is this whole land expand. You go in and you start, you get a foot in the door and then you keep upselling, which is what it's doing through product development. Yeah, it's a really good company. It's buying up its franchises, so there's obviously more value to be created through that approach. It's surprising that that's an ugly share price graph, which again probably doesn't really fit the story. I just want to chat about Good Energy there because I think it's unfairly sold into today. In fact, it was up a bit, but
if you look at the results on this, I just think it's it. For a while, I look at the shares in this, and I thought, am I wrong here? Am I missing something? And essentially, what they've done, they've gone from owning energy providers like wind farms, solar panel farms, and that is quite capital intensive. They had a lot of debt. They changed CEO. The CEO used to be at Money Supermarket, now Nigel, and he's decided to go for a low capital model where they are energy services providers. So they still have power purchase agreements with wind farms and independent operators, but they also now have acquired heat pumps, solar installations, and all that stuff. And I think revenue increasing 156 million, right? Gross profit increase 32 million. They have cash of 38 million. They've got a net asset value of 50 million. They pay a dividend, and yet it's only going to get better. The EBITDA is going to double to 10 million next year, then add 50% on again forecast. And yet I just think, what's not like here? They are literally a 30. I just see it as one of the, this is my rant, by the way. I just see it as one of the best risk reward plays on AIM. They are 32 million. They've got 38 million in cash. That'll unwind a little bit, but they'll have around 20 million. But then the asset value and the profit will pay a dividend. Their margins are improving as time goes on, as they ramp up their heat solar. And that map, everyone's worried about sort of anxiety about EV charging. They have the biggest, they are 49.9% holder of ZapMap, which is the biggest sort of map for EV chargers in the UK, and so you can tell exactly where the charges are free. You can pay through it, and it's expanding very quickly. The downloads now, I think, active users about 600,000. But that's a very valuable piece of tech that they own there, because let's be honest, people are only going to own more EVs, and the recharging stations are not going to keep up with the demand in EVs, and that's what's one thing is worrying people. So you want to know where you can get charged very quickly. So I just like the space they're in. I just think risk reward. Having said that, it did pop yesterday above 200-day moving average. Our broker's got a target of 475 based on 7 times EBITDA, EV/EBITDA 2024. And that's up here. So yeah. I just think it's when you're looking at the companies, what's the risk? And I think, well, not a lot there, because if you sold the company in bits, it's worth 50 million. So anyway, that's my rant of the day. I do apologize. I own stock. I just for a long time I thought, am I wrong here on the stock? And I don't think I am. There's a seller in there. It's annoying. It's trickling in sales all the time. And so this is a bit of a liquidity event. You've got about 4 times average daily volume coming in here today. And I think some sellers taking advantage of that. So once that clears, I think it's off up to new highs there. But
if you remember what Christopher Mills at North Atlantic, smaller company, said earlier in the week, there's been a lot of redemptions, so a lot of essential forced selling by investment funds, not trusts, I hasten to add, investment funds. So that could explain some of the sort of consistent selling pressure we've seen. Yeah, that will come to an end soon. If Hargreaves results are even to go by, that selling pressure may soon be over.
Yeah, exactly. I mean, when you see a sentiment change in those kind of companies like Hargreaves Lansdown, then that's a good move. But I think we are coming towards sentiment change. I do think the last quarter will be very good, because we'll have more foresight on where interest rates are going, probably hitting a terminal rate very soon, maybe this Thursday. This is an interesting company, Billington Holdings. Have you looked at this company before?
I looked at it this morning.
Structural steel and safety solutions. Why are they? I mean, their results are quite good, aren't they?
Oh, fantastic. Absolutely fantastic.
Are they involved in the new schools thing or not? I did look through that. There's no mention of that.
Who knows? I don't know what projects they're specifically involved in, but yeah, there's another company that's in structural steel, Severfield, which has been doing very well as well. There's a lot of things getting built. A lot of things getting built, and sort of modern structures are built with steel. Steel and glass a lot of the time. So yeah, not surprising. And again, they've got the steel side of things, but they've got the safety side of things as well, which is making sure that steel doesn't corrode on the one hand, but also making sure that when people are building this stuff that it's safe to do so in a safe environment. Regulatory pressure again there. So yeah, it's a really nice company. It's probably a bit underneath a lot of radars. I mean, look at wow, goodness, it's so cheap. Like 7 times forecast earnings as well.
One of the biggest rises on news, I used to hold this extension of rail. I mean, these, when you go into, sort of shopping malls and all that stuff, and you see all those little stalls that are not shops, or you see outside people doing promotions with brands and that stuff. They're in charge of this. They sort of release all this, footage off the malls and all that stuff, and the owners, and then they release it out to obviously people who want to sort of do stuff, do the brands.
Quite a nice business. I had a quick peek.
And it's actually tiny. It's a nano cap. It's actually 1.8 million. But they've extended their. So even in train stations, when you go to London and you see all these sort of businesses and the platform area space, and they're doing like promotions or anything like that. That's managed by Space and People, and so, but they've done an extension of their agreement with Network Rail, so they're in charge of pretty much all the areas where you can put sort of retail stuff or displays or promotions. They're in charge of all that. But there is also soon. But
I mean, they must have had a torrid time with the
COVID.
COVID for them. But, just looking at the forecast, and there are forecasts, which is often surprising to see with micro nano caps. Indeed, they're on track to 6.5 million of turnover this year, and to actually deliver a pre-tax profit. So that market cap, I almost didn't bother looking at them because they were so small. And I thought, I will go and have a look. And actually, there's a very decent business behind that sort of that micro cap, nano cap facade. And go and have a look at their website. I mean, they're working in, as you said, not just Network Rail, Welsh Rail, all sorts of massive shopping centres. Yeah, good business.
Yeah, absolutely. What's Eurasian Mining there? It's the old second Rose Red, but they're trying to sell their assets in Russia pretty much. Serica Energy, which is upstream oil and gas company, they're down like 6% a day, but I know there's quite a few fans of those. But,
they will do. It's producing oil and gas, hydrocarbons producer rather than explorer, and they would have had some very good years. They will have had some very good years in the run up to the energy crisis and throughout. But my views on oil and gas producers, always leverage to the oil price. So I mean, look at the share price; it's almost tracks.
They have amended the guidance there to 40 to 45,000 barrels of oil per day, slower than the expected ramp up of the production of Bruce and Treaton hubs following planned summer shutdowns. Group operating costs expect to remain below $20 per barrel of oil. So that's. The companies like that, though, SQZ. I mean, if you are into oil and gas, if the oil price starts going up, then in fact that's got a nice little chart that's bending around that. I mean, you can see that previous resistance there around at 250. It's come down today, but it seems to be off the bottom here. So, like I said, they are leveraged to the oil price. So if the oil price keeps ticking up and their operating costs at $20 per barrel, that's going to look good for them, going forward. But it's I'm not too into.
North Sea as well, which is always North Sea, nice safe jurisdiction.
Do you know what? Is quite a few followers today. Safe Style UK. What do they do? Windows.
Windows.
What's the point? What's the point
of Windows? Keep the rain out.
Well, at least their product's transparent.
Boom. It's a horrible update, that Safe Style.
Yeah, I really know that. But Quiz as well as a clothing. Because I mean, this is a read across. It's a smaller version, of course, of like the Assoses and Boohoo's and all that stuff. But it's a tough market for all of them. And they're saying here, always scroll down to the outlook. I tell you
what I did see today. H&M. H&M are about to start charging shoppers $1.99 to return items bought online.
But Boo, I mean, they're all doing that now. For a long time, when everything was, the costs were a bit lower, they could do that. They say the prudent assumption, the current trend in revenues continue during the second half, and this means down. This will have a knock-on effect on the group's profitability. And while it's anticipated the positive EBITDA will be generated, if revenues were these, it would be expected a loss. So they're now saying they may go to a loss. And also another one, worth looking at. Always look at the outlook. Always is code. They said I thought it was a nice little company actually. They train people to code pretty much, and then put them into jobs. They're down 32% a day. Sorry, let me just share the screen. 32% a day code, and interim results. And you scroll in, you look at and scroll down. And you realize one of their big clients, they're saying a lot of companies now, budget constraints, the workforce, and all that stuff are happening. And so there we are. You don't want to see that. The group now expects revenue and profits for the year as a whole to be significantly below current expectations. But they say they've got a strong balance sheet. But Yeah, it's never hard.
Doesn't say how significantly below. Does it got some numbers there? I missed that.
No, I don't think they say the numbers, but it's a look code.
No, their forecast for the year is 1.2 million of pre-tax profits. So you don't want to be too significantly below that.
No, exactly. So it's you see, but you can see, the effect the economy is having. The Bank of England are slowing down the economy. That's happening. We know that. You see lots of companies suffering, and so when you're selecting stocks, you've got to be very careful. In the right area, things are not going to be affected in some way. And in fact, like I said, oil and gas. I mean, if you are in a good, cash generative oil play that is at a low now, and the oil price is shooting up towards, a lot of people saying now it should get $100 a barrel at 94. Then that's going to reflect positively.
One thing, just going back to Northcoders. There's a line in the statement which struck me.
Go on.
This was about one client undergoing substantial business reorganisation, needs a division closure. As a result, immediate demands for our services diminished below 0.75 million we had been expecting, with the quantum now being uncertain. This is one thing you have to be very mindful of with smaller companies is revenue concentration.
Yeah.
Now that's what it's a tenth or whatever of their overall revenues, but that's quite a lot when you think about it. And when that disappears or certainly falls quite significantly, that takes a big chunk out of profits potentially. So always watch out where if you can see how much revenue smaller companies in particular get from single clients.
Yeah. Well, do you know what? It's basically like diversification of a portfolio. It's like having all your money in one stock. You can be good rewards, but can also be a bit of risk as well. If it goes wrong, then it'll take a big chunk out. But there's so much to get through, and in fact we're overrunning here, but a little bit. But I just want to get on some some top business stories because in fact let's look at this is the forecast for I've looked at CPI. CPI expected to go up this month. This is tomorrow. Data is out. Forecast of 6.8. Previously has been out. That's year on year, but month on month for August, it's almost more than doubling, and that's down to oil and gas. Oil prices. They're saying at the pump and stuff. But anyway, let's scroll down here. And in fact, one of the biggest stories is global oil prices surged to a 10-month high. There we are. UK forecast of the highest inflation rate amongst G7 nations, and this is OECD. We see that tomorrow, by the way. It's quite sticky, of course. But the thing is, oil is a global phenomenon. It's not like it's down to the UK. We can't control that, can we? All you can do is, like, if all the G7 or G20 countries in the world increase interest rates, slow growth down, then oil will hopefully come down. But if they're not supplying it in the market, like Russia and Saudi are trying to sort of cut back on supply, then the price is going to go up. So anyway, and there we are. Bank of England readied itself. It may be the final rate hike on Thursday. All but one of 65 economists polled by Reuters in recent days say they will raise it to 5.5. Goldman Sachs and Citi all suspect Thursday's decision will be the last rate hike. That's a big news day, Thursday, isn't it?
Not everybody know what's going to happen.
Yeah. Well, imagine if you reduced them, though. Yeah.
Well, that would seem highly unlikely, given that that inflation is looking pretty sticky. So big news day. I can't wait. Sorry, I'm very grumpy today.
Why is that, John?
I don't know.
Do you know what you need, John? You need a beach shirt. That's what you need. It is. I said yesterday, didn't I? Yesterday on Monday, we both felt we're down a bit of autumnal. The weather's bringing us down a little bit. But you need a beach shirt, John. Sod the weather. Get into yours, summer guys. Get back into it, loud and proud. I think your clothes shape your mood, John. So tomorrow, come on, beach shirt Wednesday, whatever. And maybe I'll start wearing it. If you wear one, I'll wear one. Nice colourful shirts.
I'll have to wake the heating up to 11 in that case then.
Yeah. And I think for Thursday, for the Bank of England, we should both wear ties and suits.
I've got a bowler hat knocking around somewhere.
Yeah, we should do that on official days of that, ties and suits. Anyway, everyone, thank you for tuning in, and we'll speak tomorrow. Big day tomorrow, CPI day, of course, and then it's Bank of England. interest rates on Thursday, big. Don't forget, hit that subscribe button if you haven't. Like and share it. Thank you. And the record for the most, I think, interaction day comes from Frido.
It's cross for me.
Frido is cross for John.
It doesn't matter.
I think you've ended up as friends, so that's good. Get yourself a new cashmere jumper, John. That'll perk you up. That's what someone says. Yeah, Roger, PAF and AFC is for. Frido's replying to it. No, it'll help our engagement stats. So anyway, thanks everyone. Speak tomorrow. Bye.
Yeah.